boys. Might just have to restart the stream for a sec. Otherwise, it's not going to come through on the microphone. Just one sec. All right. So, last 24 hours since our last update, we've seen another level of sell-off here come through on the US dollar. And we've seen more dramatically this pass through on the dollar yen. All right, so dollar yen is on its mission down towards 100. Now, it was only last NFP that we did get down to 100 and tested it, and from that point, we had that huge rally. This is NFP day last month. We had that huge rally on the back of the stimulus plan and BOJ action. Also, US dollar is quite strong during this little rally. Now, it did not break some of those key levels on the downside from the long-term downtrend. So, when the BOJ disappointed and the US dollar turned weak, it was a perfect storm for the downtrend to resume. And the fact that we've got all the way down to 101, it's very unlikely that we're going to stop here without testing that 100 level. And the 100 level, as you guys may know, is a bit of a line in the sand that will get the BOJ and MOF talking a lot in the market. So, it's come a long way very quickly, and it is, pretty dangerous levels. Definitely worth watching though, because it's making a holding at 100, and this will probably be confirmed with the NFP number on Friday. Is going to set the tone for the US dollar going forward. So the Euro rally depends upon this. The Aussie rally depends upon this. It's not 100% directly related, but it'll be a big leg higher in most of the majors if dollar yen breaks 100. Can it happen without dollar yen breaking 100? Of course. All right, but it'll be an important factor whether we get that clean sort of movement that makes the trend following quite easy. Now, the selling in the Nikkei has come with some selling in the so selling in the dollar yen has come with some selling in the Nikkei. Okay, that's normal, and it still has a fair bit of room to move here. It has coincided though also with a sell-off in the Dow in the last couple of days and a sell-off in the DAX in the last couple of days. Alright, so there's a lot of things happening together now. Alright, and what you want to be watching here is that there's a lot of people who want to be buying stocks on the dip. Their ability to buy and the size of this pullback in the DAX and in the Dow is also going to be a little bit related to this dollar yen move and also that US Fed number on Friday. So the non-farm payrolls number on Friday. So there's a few things happening that mean that you have to be paying attention in the next few days. All right, if you're not sure about the market, if you're not sure about the BOE, you're not sure about the NFP, you're not sure about US dollar, and you've never traded non-farms before, this is probably the most dangerous non-farms you could be sort of set up for. Right, so I'll be suggesting to most of my clients to not trade this next couple of days. Just sit to the sidelines. Right, you don't want to be taking on an immense risk. Literally, we could be 300 or 400 points either way from here, depending on that number, and also there's the price action of those key levels. Right, so it is set itself up for a big move. The way I'm actually exposed at the moment is that I've got away from the US dollar because of all these considerations, and I've got no exposure to the pound as well because the Bank of England's tomorrow. Now, luckily for you guys, I'll be doing this Bank of England announcement live, so we're watching stream of Carney, and we'll be talking about what he's saying. and the non-farm payrolls on Friday. Nick has asked me to do that as well, so we will be going over some of the reaction, and we might do some live trading. It will be very dangerous, but we might allocate 5 or 10% of the account to try and make some money from those moves. Most likely, we'll be just using the big levels and setting up a trade pre-hand. That way, we can have a bit more confidence when we do enter. Yeah, and if this happens, then we're going to do this sort of analysis, and hopefully we can get into some good trades. Last non-farm payrolls, we got into some good trades using that sort of analysis. All right, but so what are we doing today? All right, well, we've got the trades that we opened yesterday. So we're long Aussie Kiwi. After the RBA cut, we wanted to buy that pair. The main reason being that it was very easy for the Aussie to rally after the cut, and you've got the RBNZ coming up, and the market will focus on the RBNZ at some point. So the relative speeds of this Aussie rally and the Kiwi rally will slow down. The Kiwi rally will slow down as the RBNZ comes ahead, and the RBA is already cut, so there's nothing to hold back the Aussie. So we've seen some nice gains here, up around about 80 points, but we're targeting a lot higher. Yeah, we're targeting 109.50, and that could easily be attained if the selling in the Kiwi comes through, because that hasn't even started yet. There hasn't been any serious selling coming through on the Kiwi. So still got a potential sharp move here in the Aussie Kiwi if that was to begin again, similar to what happened a couple of weeks ago. All right. So let me check the room before we go in a little bit more in depth about some of these other trades. You're asking how I feel about shorting the dollar CAD. I think there's better pairs out there. Alright, the dollar CAD has reaction to the oil weakness, so you're not getting a clean move there. The Aussie's a much stronger way to play a commodity bounce at the moment, because it doesn't have that exposure directly to oil. Also, the Chinese data has been quite firm, so the Aussie is a lot safer in that moment at the moment. I will bring it up though in a sec, and we'll have a little bit closer look. We'll have a look at oil, and we'll have a look at the Canadian dollar. Yeah, there was some weak private oil numbers coming out today, early already. So yeah, but the big ones for the oil market are coming out later tonight. So you will see a reaction for sure to that. All right, just clean up this chat a little. Yeah, I've been watching Good Boy's account. Hopefully he's okay. Mark's been pretty wild. Yeah, hi Wings, how are you, mate? Alright, so the main point about getting away from the US dollar is that we don't want the exposure to some of the wild moves that are happening. Yeah, and this is why we're going to stick to the crosses until next week. Or we're just going to trade some sort of scalping movements on BOE. I mean, the only thing tomorrow, and we'll go into depth about it tomorrow, is I'm actually looking to buy the pound on any fall towards, say, 130. Now, how we buy it probably going to be by selling euro pound. All right, buying pound outright is a little dangerous given that the NFPs come up the day after. But I expect it to be a bounce. Similar price action to what we got from the RBA. Just the market wants to buy the pound. It's just waiting for the best levels, and they want to sell the US dollar. So there will be that relief rally most likely in many scenarios, unless they go nuclear, and that's a real possibility. So You know, let's not just buy the first dip without reading exactly what they've done. So they're expected to cut rates and announce QE, um, but how much QE and when it's going to be implemented will be important. And also, if they indicate they're going to go negative rates, anything like that, um, then you can get some selling straight through, down to 130 even below, and it won't be a safe buy on the dip. But if it's a mild, as expected, cut with a 50 billion QE package over 3 months or so, then you will get a relief rally, I believe, after initial selling. Yeah. Depending on dollar yen's action as well, maybe pound yen, but probably too dangerous in that pair. So the other trade that we bought yesterday was Euro Swiss. Now we're just playing that range. That range between 108 and 109 has been holding nice for the last month. This is like the third or fourth trade we've done here. We got in down at 108.17, so close enough to that 120. Actually, 108. You would have actually got a 108 if you had held off a little bit, but not to worry. If you've entered this trade, you should be making some pips here. And then look, don't be too greedy. Just look to get out towards 108.80. Be greedy on the Aussie Kiwi because the reason for this trade hasn't even started. These are all free little pips here just from the Aussie side. The big pips are going to come from the Kiwi side. And the other trade was a little dangerous. It's just speculation that the euro yen would run out, but because of I basically thought that the euro would start to spike higher, and it hasn't. So the dollar yen selling has been a little sharper, and so this euro yen has not found support. Some of the comments from the BOJ MOF have not been enough to abate yet, but this was a quarter size position, so I'm not too worried about it. The euro, if it starts to rally, definitely has enough upside potential to sort of counter that next little move in the dollar yen. And so this one's relatively, it's a pretty good risk reward down at these levels. Obviously we can fall a couple 100 points, but we'll cross that bridge if we get to it. So yeah, slightly down at the moment, but many scenarios this goes back up. I'll probably set up some stop and take profit when we go into a little bit deeper. Some point, maybe tomorrow if I've got a bit of spare time at work. Alright, so actually this Kiwi dollar selling is starting to get a bit more serious, right? This is interesting. A lot of traders are short the Kiwi, and they've been getting burned as it's been rallying relentlessly. Remember, this is the price action before the collapse. Yeah, so relatively similar. If the next rally fails lower than 72.50, that could be a sign and get much more aggressive sellers coming in. The rally on the Kiwi is running out of time. As early, it's Wednesday night, right? So Thursday morning, Wednesday night, European time, Thursday morning for New Zealand time, that you do get that RBNZ. Now they can cut 0.25. There is some speculation they're going to cut 0.5, 10 to 15%. But very likely they cut 0.25 and are also dovish. Now you might not get follow through selling too aggressive on the downside, but you should get some nice movement here on the Aussie Kiwi. But either way, over the next couple of days, and especially on Monday, Tuesday, and Wednesday, the potential for selling here on the Kiwi is quite real. Let's just see when it develops. So I have a feeling we've got another leg higher. So I'm not in a hurry to sell straight Kiwi, but I've already got that exposure via the Aussie Kiwi, so I'm happy to see this sort of selling off here. If we break this 71.50, that would be great, and might get some follow through. Kiwi does what it wants, right? It doesn't care about the rest of the market too much. When it starts doing its sharp moves by itself, this is all by itself. The rest of the market was rallying, it wasn't weak. So you do have that. You got to remember that when you're trading the Kiwi. The US dollar data, US news and commodity news or euro news or dollar yen news is second to just the flow in Kiwi. The flow sets the tone, and because it's such a small currency in terms of the volume traded, you you can get pushed around by the big boys quite easily. So hedge funds, it's a favorite for hedge funds, and it does those moves which don't make sense, like that rally in the face of the RBNZ. It just didn't make sense, right? But it does this all the time, so you got to forget the fundamentals a little bit. Is it affecting the Aussie? Yeah, I think the Aussie's just in a consolidation mode, though. I can see it going a lot higher if there's nothing to derail it. So if it's a benign NFP number, I think the trend is quite high. We're going to go probably towards that 77 at least, and then potentially 78.50, right? And longer term target is 80 cents. All right, but that requires a fair bit more US dollar weakness. So I'm definitely bullish, and I think the price action's confirming that is the right direction. It may wait until NFP to make a move here because we are so close to some serious levels. But if we get back above these, you might have to shut the gate here on the Aussie. Sellers are getting very disgruntled, yeah. Alright, so that also will help the Aussie Kiwi, and that's the reason why I think we can get up to that 109.50-ish level. Dollar Swiss has found a little bit of support. That's helping Euro Swiss. Pound went on a crazy rally given that the BOE is tomorrow. There's a lot of clients asking me if they can sell the pound up here. Sure, I mean, why not? If you think they're going to cut, right? But get out after the initial move is my advice, right? I don't think there's going to be a sustained move lower, and so just be very careful. The pair that I do like at the moment is short pound Aussie. Alright, so short pound Aussie into the announcement makes sense, and it's one of those trades where you might be able to hold it afterwards as well. Maybe take half the profit. So let's just see how that develops. I haven't got into that trade yet, but it's one I'm looking at. So if I'm going to express some sort of pound weakness here, I do want to go against the strongest currency. Aussie's probably the strongest at the moment. This chart doesn't look so clean, but that was some surprising strength. The other trade, which is making sense as well over time, is going to be that Euro Aussie short. The memo has not been sent out on this trade yet, though, either. So technically, it was very strong going into that RBA cut. All right, but since then, the reversal has been met with support. So obviously, not everyone's in the same game yet. And the price action and the candles and so far I haven't sold yet, right? I'm not selling into that, but if it's a trade I'm watching. It's a chart that I'm looking at here. I just think if the Aussie is going to 80 cents, that the Euro is probably going to be under pressure. Not under pressure, just not going to be as sharp on its way to 115. And that will bring the Euro Aussie back down to around about 145 to maybe breaking that key support. So let's just keep an eye on it. Respect that it has been trying to rally though, and really we just want to see the Aussie make a clean break higher. That way we can get involved in some of the Aussie crosses. So a few trades developing, nothing concrete just yet. Having 3 trades open is enough usually, guys, in the market. And when you have so much event risk coming up because of dollar yen close to 100, because Euro's threatening to break into an uptrend, and because the NFP is coming, let alone the BOE tomorrow, you can be a little bit cautious in your trading. Anyone who tells you they know what's going to happen in the next 48 hours is lying. You know, anyone who talks in conviction about, you know, where we're going to be or what the US dollar is going to do. I mean, it's in flux, and the market is extremely fickle lately. So don't try and suggest that the US dollar weakness from that Q2 GDP is set in stone, right? It was only a couple of months ago that it was US dollar strength throughout the world. A couple of weeks ago, actually. Yeah, and exactly what the BOJ is planning. I mean, they had a special meeting today, BOJ and MOF. They know the dollar yen's reversing. They know they've lost control of it. They were happy a couple of weeks ago. Now they've like, well, you know, we can't let this keep on going down. This is going to, you know, the main thing that they're trying to do is stop deflation. If you have a strong yen, right, it makes it cheaper to import, and they import a lot of things, especially oil, right? Japan. And so they can't really allow a really strong dollar yen. That's why they're jaw boning every day at the moment. You know, 3 or 4 times a day actually. So it could be some things happening soon. Doesn't mean it won't go below 100, but it's not safe to buy below 100. Definitely not safe. So it's not safe to sell below 100. If you believe that the intervention line is near there. But we'll talk about that if it happens. It's been a while since the Japanese actually intervened. So they threaten it a lot. Alright, so let's have a look here. I did say I was going to look at dollar CAD and oil. Alright, so oil broke to new lows last night on that weak data. Stabilized around the 40 level so far. That helped dollar CAD to bounce. So, you know, comparing that chart inverted to the Aussie, this was a lot weaker. The Canadian dollar's a lot weaker, and it's all to do with that oil sell-off. The oil data tonight, given that the oil is at 40, is critical, right? If you're going to bounce off 40, it's going to look different on the charts. Yeah? So the market's come back all the way down. If we break 40 cleanly, the next move down is a lot lower, towards that 36, 38. And that would push dollar CAD up, and that would put dollar CAD on a much weaker footing. If I was going to buy dollar, you know, the US dollar, I'd be buying dollar CAD. So yeah, they're the two worst currencies in the market at the moment. So Aussie CAD long is a trade. It's not a trade that I do. It's not a pair that I trade. So I haven't got involved in it, but it makes a lot of sense. Yeah. Unfortunately, it's quite high. It's not good risk reward. Oh, pound CAD would be messy looking chart. That would be a messy looking chart. I mean, look, you can't buy it. It'd be a good buy if you didn't have the BOE. So maybe after the BOE tomorrow, you can look to buy the dip. So let's have a look at pound CAD. It'd be already too high. But after because of the positioning here, yeah, this is nice. This is nice. So buying this makes sense, and it might be the preferred way to buy the pound, as you don't get exposure to the US dollar movement. Might be the best way to buy the pound after a major BOE move, and so looking to buy, say, 173.50, 173, on the expectation that the pound will bounce and that the CAD will continue to underperform. Yeah, but let's have a look at oil tonight. Yeah, if oil bounces off 40, all bets are off with the CAD. So that data coming out is in 5 hours. That's US crude oil inventories, and that's huge in the market. That's like the data that you watch. and it's just a bit ominous now that the oil is at $40. The reaction might be bigger than normal. Yeah, so yeah, look, if oil's lower and this is a little higher and then it drops down, it could be a better, really nice way to buy it after the BOE. Yeah. If oil's higher, then just drop the whole idea. You don't want to play with oil because that's what you're playing, a proxy trade with oil. I hope that makes sense. This one's amazingly consistent at the moment, Euro Swiss. So just in terms of it bouncing back up towards that 10, just give it time. This is the thing about this one; it just takes time. It's going to take a few days just to get up there. All right, is any questions, boys? We're pretty quiet tonight. I'll do a little bit of research review for you. All right, so we're going to look at a couple of bank reports here, and I'll also just go over a little bit how to read them. That's something that they are filled with a little bit of, just FX jargon, but you want to be able to read these just so you can get to that next level in your trading. We'll start with the FX daily. Now we look at this one regularly. This is a daily technical outlook. So from this you get the really top end. And they do go in, some of the supports and. Alright, so these guys are also talking about focusing on the 100 level. That's literally talking about this. So they're just talking about what we were just talking. And so you should see that come through in a few of the technical updates. Yeah, so there's a bit of confluence coming through in terms of that resistance levels here on the euro. I personally think that the euro's next big move is higher, but I've been wrong before. I thought it was happening at that 116 level a few months ago. So, yeah, it's been remarkably contained for a long time now. When it busts out, it's going to move 1,000 pips probably. When it busts out of the 115, 105 range, I'm talking there. Dollar yen, I mean, you guys know that I naturally want to buy it. I'm just sitting on my hands here, being as patient as possible. Looking for some reason to get involved. It's just too dangerous here. Too dangerous to be buying early. So these guys are waiting for that test of the 100 level. Psychological, touted as the BOJ line in the sand. And will have impact across the board. Alright, so ignore this one today, the pound one. I mean, you can look at the supports and resistances, but in general, when you have a big central bank meeting, you can't use technicals. And this is not just a normal central bank meeting. This is action stuff, right? This could go down as you know, like a few years ago, Draghi said we'll do whatever it takes to save the euro. Then, you know, remember that time that the BOJ announced its Abenomics? You know, it was absurd, the reaction. So, you know, let's not try and trade technicals here on the pound. Yeah, selling pound does make sense. It's just, I don't know. Something feels wrong. It's like a gift, right? You know, the poker gods give you, the Forex gods give you the gift. You're like, well, I might not take this one. I've been beaten before. If it looks too good to be true, maybe it is, right? Maybe we don't get that sell off and you just get caught short pound. Imagine if they did nothing again. Wow, that's 138, 140. Yeah, they're going to do something. This PMI data was terrible. UK's heading for a recession, so they have to try and reverse that course and support it. They don't have to, but that's what central banks do these days. Yeah, so the targeting here, looking at that 70, 76.43, you know, really 77 is the target, yeah. Once again, these technicals are not, on the Kiwi dollar that we're looking at here, are not taking into account the RBNZ. So just, I mean, 73.25 is obviously real. That's the previous high. And if we get up there, I'm selling for sure. Right? If we get up there, say after an NFP number, you know, there's just too many ways in which the market goes down next week for you not to be selling a rally that high. Just there's no need to get involved right now. But we did look at it before, and it was starting to develop quite bearishly. Let's have a look at it in the last couple of minutes. Yeah, so it's still getting gradually sold. You know, when the market's selling Kiwi on no news, that's the real selling, yeah. But let's just see if the next rally fails to get past, form maybe a little head and shoulders, similar to what we got back a few weeks ago. You know, next little rally fails, and then it's on. Dollar CAD. So without the US dollar weakness, dollar CAD will probably be at 135 given oil's at 40. So it's really been confused by that US dollar weakness, and it didn't break that cleanly, that 132 level. It, you know, hanged around up there for a little bit, but came back down. So there was no follow through, and market was actually caught a little bit long, and so that's why you got that pullback all the way to 130. But yeah, I mean, people say that it's decoupling from oil. I think it's just there's some tactical moves here against it being long dollar CAD just because of that US dollar weakness more than the really, you know, Canadian dollar demand when oil's falling. I don't think there's been a long-term decoupling between Canadian dollar and oil. Yeah, I mean, let's just see what happens, right? If oil falls tonight and it's below 40 tomorrow when we're doing the update, let's just see where dollar CAD is. If there's decoupled, all right, I think, you know, let's just see. And Euro Yen, that pair that I've bought as my risky trade. I just see many ways it can rally, but it's looking pretty sick at the moment, and it is a little bit dangerous to be buying against the trend. All right, and Euro Pound, that's our favored one. Anything above towards 86 tomorrow, I'm looking to sell. That's after the BOE. So, Justin, what do I think about NFP? Yeah, we're gonna do the live stream of it, mate. So we'll we'll be there when the numbers come out. But we'll go through some game plans on the day as well. Yeah, so that's an interesting. I mean, this is a pretty advanced report, but the trendiness of euro is at record lows. That means there hasn't been a clear trend for a long period of time, and that's true. I mean, it's just been sideways trading, right? And the second part is you lose money by trading central bank expectations, and that seems likely lately. The market's been disappointed by nearly every central bank, right? There's a lot of buy the rumor, sell the fact, though. That's probably a lot of that. Yeah, that's not a good one. So it's a good point to remember what they're bringing up here. The most crowded trade in the market at the moment is, the short cable. So, when the dollar switches and you got one of the pairs being really heavily short, then that creates that opportunity for a big short squeeze. So there's many ways that will happen, guys. It's that's why I think it's a little dangerous to be selling the pound straight into it if they under deliver, and it's pretty safe to be buying on the dip if they do deliver. With dollar yen, they're looking to sell rallies. And they don't think the Kiwi will get back above 72.50 ahead of the RBNZ. So I mean, pretty contained stuff there. They're not going out on a limb, that's for sure. Yeah, so Credit Suisse came out with a report suggesting that the dollar yen is going to 95. Let's have a look at that. I was reading that earlier today. That's a big call. That's a pretty big call. That's a technical call, so let's not get too excited. Now remember, if you've been trading for a few years, dollar yen was heavily or substantially lower, right? It was back at the 80 levels. Then they started to ramp up some of their policies, and it took a while for it to break 100. And that last little ramp up is Abenomics. But before that, we did spend a lot of time in between 100 and 95, so that's the reason they're targeting that level. I don't know. I think it's going to be hard pressed to get there. Real US dollar weakness is going to have to come through, and then, basically pricing out no rate hikes this year, at least, to get that dollar yen down to 95. So continued weak data, right? But you don't want to have to rely upon that for a trade to work out. All right, boys. Is there any questions? Otherwise, we might keep it nice and short today. Got a big night coming up tomorrow. We'll be watching Carney. We'll be watching the price action. We'll be sneaking into a few little pound buys probably live on the stream. So if you do want to come in, it won't be at 9 GMT. It'll be a little bit later at 11 GMT. if you have any questions or you want me to look at specific pairs, just send me a message during the day. And if you miss tomorrow's Bank of England announcement, then on Friday we'll be doing the NFP live. So that will be even later. But it will be a cracker. Keep an eye on the oil data later tonight. That's going to be a main mover today. ADP report coming up too. Let's not get too excited about that though. Alright, good luck trading, guys. Trade smart, yeah.